Hello, everybody, and welcome back to the Cryptoconomy podcast. I'm very excited to have Eliézer Ndinga here, who is the global head of research and founding venture partner at 21Shares. So, thanks so much for being here. To
Thanks
get
for
started,
having me.
yeah, I would love to just hear a little bit about what brought you to 21Shares and how you got involved in crypto, and what most interested you about becoming a part of the industry.
Sure, sounds good. So I actually started my crypto journey 11 years ago when I was finishing up my master's in international finance in France. You can hear the French accent now. And I discovered Bitcoin through a cryptography class called Introduction to Cryptography and Bitcoin. And that was new to me because I was learning about finance and legal infrastructure and frameworks. So really nothing to do with cryptography and computer science, but I was always amazed by futuristic technologies, frontier technologies, since I was a kid. So I wanted to join. So I joined that class. And that class was taught by a former soldier who served in Afghanistan 4 years before that class and discovered Bitcoin through the soldiers. And the soldiers were actually talking to him when he was serving in Afghanistan, and they were saying that he should learn about Bitcoin because Bitcoin is going to replace local currencies where there is hyperinflation, or even gold in some places. So I was really amazed by that, but he never really thought about the economic aspects of Bitcoin, but more about the technological complexities of it. So I can tell you, we started with 50 students at the beginning of the class, and then fast forward to the end of the class, we had two. So people like completely lost the plot and left. But I really wanted to learn more about Bitcoin because as a global ledger, I really thought it would be a phenomenal technology for remittances and even for equity raisings as well. So, for example, you could have dollars in the Bitcoin and then allow investors around the world to invest in companies in the Philippines or in companies in sub-Saharan Africa. And that was basically my whole thesis about Bitcoin. And that's how actually I graduated with my master thesis around this topic. Um, but that was basically a year before Ethereum came out, a year before we had dollars on the blockchain called stable coins. So that was a topic way ahead of its time, but it's been great, of course, to see the evolution of the asset class ever since. After school, I went to work in venture capital, to work in fintech and invest in fintech and crypto companies at the seed stage level. And then I wanted to be on the other side of the table and becoming more of an operator. So I was a founding team member of a blockchain analytics company called Mosaic, where I was heading up research. And then the co-founders of 21Shares wanted me to be a founding team member of 21Shares to essentially build a research department from scratch with the great work that I was doing at Mosaic.io. So it's been about 6 years and a half that I've been at 21Shares to help grow the company from a small startups in an apartment to now a global asset manager with multiple products and running about $5 billion in assets under management. So it's been great. It's been great to see the journey so far. Not an easy journey, but in hindsight.
Yeah, you get some gray hairs. I'm like, I got gray hairs in my beard.
Oh yeah,
Once you,
not yet. So far, I'm good.
yeah. Oh no, you're a certified OG. When you've been doing it this long, you've seen a little bit of everything, I'm sure.
It's a
But you
marathon. We're building for generations.
That's what it is. No, you have to love it. You got to love the people, but the people make it easy, honestly. You meet a lot of really cool, passionate people, and I think I like what you said about, meeting soldiers and just, you never know the people who you find who are interested in the stuff are all over the world. They're everywhere. They come from all different backgrounds and they come at
Yeah.
it from all different philosophies. Some people, come from a country where inflation is miserable and so they understand the value there. Others just, want privacy or they want to be able to walk across the border with their money and not get stopped by whoever it is. And so there's all different reasons. And I think that's, something that draws me to kind of what you guys are doing with 21Shares is like, for me, like, I'm not an ETF guy. I'm never buying baskets of anything. I'm like, I know what I want. I buy as much of it as I can. I leverage up, I double. But I have a lot of my friends who are like, no, I buy the ETF. I go to my advisor. We figure out what we can put in the portfolio. We balance it out. And so I think that's the tough part of the industry is recognizing that everyone has very different risk tolerances, very different understanding of how they want it done and how much of the existing system they want to kind of like work with versus work against and around and the extra work that is involved in that. Is that, I guess, something that you found over the years? Have you found that it's, a new clientele that's getting interested in like the ETFs and sort of the traditional finance versions of some of these products? And how do you appeal to those people when a lot of the underlying stuff inside of those products is still pretty heavy and technical and, harder to understand, I guess?
I agree. And it all comes down to education. Um, and that's why for us, when we provide our research, we really try as much as possible to put ourselves in the shoes of the investors to understand their risk profiles and tolerance, but most importantly, also their segmentation, right? The way you would talk to a family office, to a hedge fund, to a private bank, or a high net worth individual is to some extent going to be very different, despite the fact that the thesis, let's say for Bitcoin, is still the same, right? In the long run, it's an emerging store of value with similar features and parameters as gold, limited supply, easier to transfer, easier to hold and store, etc. But we still need to be able to adapt to their language using the analogies that make sense in their industry so that then we can translate content that can speak to them. But most importantly, what's important here is that it depends on the journey where they are as well, right? So some investors already bought Bitcoin and Ethereum a while back, and now they actually want to expand to other asset classes or even other sectors within crypto. So we have to also understand where they are in the journey. Are they beginners, intermediate, or advanced? But what we've seen so far is that the fundamentals and first principle questions are still the same over the past 12 years, even especially for me as an operator and investor in the space. I've seen so far that the misconceptions around this asset class are still the same. The questions around whether crypto has intrinsic value like a company are still the same and relevant as ever today. And most importantly, how much should I put my portfolio into Bitcoin, right, is also a relevant question that still investors are asking on and on again, right? So we really have to take and hold their hands to be able to go through this journey with ups and downs and market cycles. At 21Shares, we're really known to have gone through multiple market cycles. Even before launching the company, like Bitcoin had an inflation bug 2 months before we officially launched the world's first basket ETP in the European markets. So the inflation bug was allowing miners to be able to mine a lot more BTC beyond the 21 million limit. It was never exploited, but that was a big blow in the Bitcoin code base. And then we had also hash rate wars between BSV and Bitcoin Cash. So many things like that really are rooted in the DNA of 21Shares to have operational excellence to build high quality product for investors. Because at the end of the day, we can have amazing research, but it's important for the investors to have also high quality product that they can trade during market hours in a very efficient way, the same way they would invest in the stock market through Apple, Nvidia, or even SpaceX now, right? So that's why for us, operational excellence and high quality research are really the non-negotiables to build the company that we have today. And it's been really rooted in the DNA of 21Shares to be able to get to where we are so far.
And it's really not easy to do too. I mean, just picking out, if you had gone BSV instead of Bitcoin and decided, oh, this is the new Bitcoin, your company is toast in one day. You listen to one of the wrong guys, you all of a sudden, Kim.com, you're listening to him, you're going all in Bitcoin Cash, telling your clients that, and I've seen it happen where you can one bad
Yeah.
move and you blow everything up. And so you have to have that operational excellence, like you said, to really know and understand just what's BS, what actually matters, what technology changes things, and who has the wherewithal to actually, get it together. So I guess and I've done research. So I did a lot of consumer insights research, and we worked with, a lot of hedge funds, family offices, Best Buy, Target, BizHeart, whatever. And we did a lot of data heavy research. But you realize that a lot of the research out there is it's just BS. It's terrible. It's terribly sourced. You have no idea who's on the other side, especially in traditional industries. I think crypto, though, is interesting because you do have all this public data that is very accessible, but you might not necessarily know where it's coming from, whose behind it, whose wallet's tied to which wallet. And so I guess how do you how do you approach the research side? Like, how do you go in and really understand a product, understand, is this something that we want to back, and, something that we would want to, commit to long term? And yeah, how do you avoid the ones that aren't?
No, it's true. It's a phenomenal question. And we really start from the source, especially when it comes to data disclosures and risk disclosures. As you know, the data is available everywhere. Everyone can have access to blockchain data. But the only thing that very few can do is making sense of the ones and zeros that you can see on the screens. So that's why we actually pioneered on Dune Analytics, and shout out to the Dune Analytics team. They've done a phenomenal job to build the platform. Big fan of Frederick, the CEO. And what we did is actually leveraging Dune Analytics to build the analytics layer of blockchain rails. So essentially, now, thanks to our expertise, investors have a quarterly earnings like report on a 24/7 basis so that they can see the evolution of the user growth, the revenue, the volatility, the correlation with the stock market in real time, such that they can make informed decision. But even for us as well, when we're looking at market trends, when we're looking at specific products, what's really important for us is trying to understand the fundamentals of the investment. The same way any venture capitalist would be looking at the team, criminal backgrounds, technical prowess, operational excellence of the product, the market, how big is the market share, the growth of the revenue, the growth of the users. So we basically have the same combination and principles as any private equity investors when we look at these specific products. But it's true, to your point, that we don't have the equivalent of the Bloomberg terminal in crypto. So we actually were forced to build our very own data analytics platform through Dune Analytics so that we can have essentially real-time data on Bitcoin, Ethereum, and the long-tail assets like Solana before these products were actually important for investors' portfolios, right? So we launched the world's first Solana ETP in Europe, as well as the world's first hyperliquid ETP. We're known to launch world first products. And before market acceptance, what we really want is really understanding how the team, especially in the early stage, can really create a category defining protocol or project that would definitely define its own category, right? So think about what Solana has been able to do, or Ethereum in the early days. Same for Hyperliquid. It's not the world's first exchange, right? We've seen Uniswap, DYDX before, GMX and Solana. So many names that feels like no names maybe for people in your audience, but were attempts to build an everything exchange on blockchain rails. But of course, Hyperliquid has been able to create on a scale that we've never really seen before, on the back of the market events that we've seen with the geopolitical conflicts. So back to our research principles, data is important for us. It's impossible for investors to make informed decisions, or even for us to make product decisions, without having the right data sets at our fingertips to look at the evolution of a specific protocol. And then we also leverage as much as possible the expertise around the space, especially around blockchain technology, so that we can better understand the audits, the technological risks. Sometimes there are many hacks that we've seen in crypto that we only understand in hindsight. So it's incredibly important to look at these security audits very clearly and get translated into the language that we can really understand, such that we can really have a 360 view on the protocol itself. And of course, we have to work with regulators at the end of the day, right? To list these ETPs, we have specific regulatory requirements around liquidity, around the volumes, around the market cap of the product, the time to market, as well as the service provider support, whether it's market making or custody. So long story short, even though a project looks great, we have to make sure that we work with regulators to be able to list this ETP and then eventually having investors to invest in the product. So you can tell that a great tide lifts all boats, and we cannot do it by ourselves.
Yeah, there's a lot that goes into it. You need a lot of pieces, a lot of the right people, making sure that the right decisions are made, and fundamentally understanding what are very disparate concepts from the regulation side to the tokenomics to just understanding the team and where they come from and who they are and how likely they are to run off with people's money, which I feel like is a lot more of a risk, in crypto than the average, IPO that you're investing in. That's really not nearly as much of a risk, and so there are all of these other considerations I feel like you have to have, and even just understanding the token flywheels of something like hyperliquid and not having the securitization of blockchains, I think makes it much more difficult because people have to find creative ways to essentially create value. And so I guess that's my question: is as the regulations change, do you imagine that there will be a lot more like securitization and tokenization of disparate companies? And do you think that like early stage startups will be, more enticed to simply go through the token model route? And
Mm.
if so, do you think that's something that you guys might be working on long term? I would love to have a basket of early stage, crypto startups where I can just be like, yeah, let's go get everyone who's been on the Cryptoconomy podcast. I think if you look at the track record of people who've been on my podcast, it's actually like insane because I just I mean, for one, if you don't come and show your face, like the odds that you're gonna rug are way higher. So just by filtering people who will put their face on camera was enough of a enough of like, and if you can have a conversation for an hour there, that's another pretty solid indicator you maybe know what you're doing. But curious about
Yeah,
that.
it's a great question. Um, I don't think that a token is a product in and of itself. It's more giving access or providing additional utility to an underlying service or product based on the product itself. That's why oftentimes I think I'm really wearing my venture capitalist hat now. When you look at the specific service or product in crypto, whether it's an exchange, whether it's a custody service, you really want to make sure that you as an entrepreneur, you are building a product that investors want in a market that has a significant tailwind and that is big enough for you to grow significantly in revenue, and then eventually, of course, profits. So that's why for me, if the token does not make sense to be built into the product lifecycle, it becomes then a distraction, especially if the token has a 24/7 markets. You have to list them on exchanges or decentralized exchanges. You have to look at the liquidity. You have to have market making support and agreements in place to then create that flywheel. So that can create additional friction from an entrepreneur perspective, but even for the user as well, right? So sometimes, like some people have access to a specific product, but they have to stake their token, right? But if that creates additional friction, then investors would look at a Web2 equivalent of that, even though it's maybe more centralized, even though there are not enough disclosures around the transparency of the operations of that specific product compared to a Web3 product or a crypto product. So I do think that eventually we're going to see a mix of both, where you're going to have equity only products that really make sense, and also token linked product like Hyperliquid, where essentially there's a flywheel between the product itself tied to the revenue from the volumes and the transactions that goes back to the token share buyback, right? So I do think that we're going to see a mix of both. And the great thing with Hyperliquid, for example, is that it has set the standard for what should be built with consumer-facing financial products in crypto, right? So a consumer-first product owned by the community in majority. When you look at the token supply, owned by over 70%. We're also seeing a token share buyback that investors, especially in Wall Street and Main Street alike, understand really well. So I do think that if eventually you want to create a portfolio, and that's of course not financial advice, but if you wanted to create a portfolio, you would have basically a mix of equity and tokens for early stage companies. And I think Hyperliquid is definitely an early stage investment, right? When you think about the time to market, it's only a couple of years old compared to, like, for example, a pony market that is 5 years old, or Kashi that are already 5 years old. So I do think that you're going to have a mix of both. But the token has to only make sense in the product lifecycle. Otherwise, it would create friction for the investors.
Yep, 100%. I think really for me, the question is like, is it going to be more difficult than dealing with like VCs all day? And in my mind now, I'm like, honestly, I think it would be easier if the regulation was simplified. I think it might be. And also, I think what's very nice about the token based projects that I've worked with is your earliest investors become your earliest users who become your
Yeah.
most diehard proponents who then test all of your products before you hit the market. You've got I mean, I used to spend $100 an hour to have people test my products, and it's like these people will do it for free, and they're the best feedback you'll ever get because they really care and they really know it well enough. And like, there is something about that that you can jumpstart both sides of the equation for a lot of people, and also give people access. And I think that was kind of the draw of the ICO era was, oh, now we can get early stage access to these companies that only the VCs and the accredited investors had access to, and now anyone can. But that comes with the pitfalls of, well, now anyone can launch one too, and you don't know who these people are, and a lot of people take advantage. And so it would be interesting to see if, and I feel like there have been some rumblings about Robinhood and others thinking about starting to do this, and I could see them as they're taking out pattern day trading rules and doing a lot of this other stuff. I think they're starting to appeal to investors with a little less money to see if they can get them into the markets and somewhat earlier opportunities. So that's exciting to me. I think, especially for entrepreneurs in the industry, it can make it easier for them to raise funding over time. Um, no, that's so. I guess I would love to talk a little bit about like Hyperliquid in particular. So you guys were pretty early on that one. What was the like you said, like compared to DYDX, all these others, what really spoke to you about it? I could see it. To me, I was like, yeah, this is going to go somewhere, but I couldn't quite put my finger on why I felt that way. And I think they did a lot of the same things that everyone else is doing, but they just did it really well, and they did it with all the right people, and but I'd love to hear your take on that.
I think the success of Hyperliquid so far, because success is, of course, a marathon, not a sprint, right? So within 2 years, phenomenal start for Hyperliquid. And it's important to see what it does for the next 10 to 20 years, right? It's the same way we can basically um, measure the success of the Amazons and the Googles of the world throughout multiple generations. But it all comes down to the background of the CEO. When you think about what Jeff has done, Jeff is the CEO of the Hyperliquid, Jeff Young. Um, he is a mathematics Olympian. He's a former high frequency trader. He tried to build a prediction market before putting market in Kalshi, and I believe also before um, Augur, which was the first
I used to know
prediction
this
market.
guy back in
Yeah,
Austin. We used to hang out.
exactly.
Yep, that
So,
one. That one was hard. I was like seeing
oh my
Kalshi and Polymarket come out. I was like, guys, you
God.
had this.
Exactly. So when you look at the background and the story, he essentially tried to build products for the community, by the community, with a deep understanding of traditional financial rails because of his background. And then the reason why I'm also going to move towards a recent time is around 2022 when FTX collapsed. FTX was the archetype of one not to do in crypto, right? Operating on a black box operations, commingling customers' funds with operations funds, gambling customers' savings as well. So that was the largest financial fraud that we've ever seen. And the Hyperliquid team really came after the FTX collapse to create a solution. There were solutions before, to your point, UIDX and GMX on Solana and even Uniswap as well on the spot markets. But Hyperliquid really wanted to build a product that has an end-to-end stack, both the blockchain and the consumer-facing application, so that they don't basically rely on the Ethereum, the Solanas of the world. A high-frequency trading firm that basically creates a flywheel between the blockchain and the consumer-facing application. They wanted the product to be community owned, meaning that people don't feel that they are having a pre-mine or insiders before, or even VCs before, that would dump the tokens on the retail investors. It has to be retail and community owned first. The experience on the platform has to feel like a Web2 experience. And then they wanted to create a flywheel of developers that could create their very own marketplace for 24/7 trading of perps on crypto assets and financial assets. using the Hyperliquid API of blockchain, right? So that's what has been really unique about Hyperliquid. When you look at the specific failure around the attempts of decentralized exchanges like EtherDelta was the largest decentralized exchanges earlier in 2018 and 2017, and it was very large, especially around ICOs, secondary markets. But EtherDelta was operating on a non-transparent order book. It was built on Ethereum, but it was a non-transparent order book. They were hosting customer information on a company-owned server. So basically operating an unregistered broker-dealer by the SEC definition. And secondly, they were also allowing token listings manually and done by the CEO itself, right? So Hyperliquid really learned these key lessons and built a self-custody platform where they don't host the information on your behalf. They have a transparent order book 24/7 where you can see who trades and where they trade and why they trade. And then thirdly, and most importantly on the token listing side, is on a permissionless manner because they have over 25 validators around the world that would basically allow the listings of the listing of specific assets. And that's why Hyperliquid has done a phenomenal job. But I do think it really comes down to the background of the founder and most importantly, the community support that they had from the get-go, where you really felt that it was not an unfair product launch. It's a fair product that people can relate to and feel that they can own and have a piece of that success.
I think that's a great point. Yep, and I think that was a lot of also maybe not necessarily ICO craze, but a little bit after. It was a lot of VCs who were getting in early, dumping on the people who came in after, using them as exit liquidity. You had to figure out which of the VCs had invested early because you'd know pretty quickly what the chart was going to look like right after. And I think that put a bad taste in a lot of people's mouths, and just being able to say like we're all in this together. It's just like with VC investing, everyone wants, oh, I want preferred stock, I want this. It's like, no, just put everyone on the same, give everyone the same rights, everyone on the same table, and usually people are a lot happier. And so I think that seems to be the sweet spot. So I guess on the point you mentioned with the regulation, how would you say that that's changed over the years? I'm sure it's a nightmare to do what you guys are doing with the regulators. So, I mean, how has that process been? Has it gotten easier? If someone wants to launch a product that's regulated, like where should someone even start in your opinion?
So we started in Europe, and the reason is because the co-founders talked to over 20 regulators before launching the company to understand where to launch an ETP platform. The same way their very own mothers are investing in commodities and the stock market in an easy way. And unfortunately, in the US, we had regulation by enforcement in the previous administration, which didn't allow these kind of products to be launched at that time. And oftentimes there were multiple rejections of the applications of the spot Bitcoin ETFs for the last 12 years, starting with the Winklevoss application on the Bitcoin ETF back in 2014. So it's been actually, like, when you think about it, 10 years in the making to be able to launch the world's first spot Bitcoin ETF. What is interesting about what has changed so far is that regulators are understanding more the value proposition of these different assets. And they're seeing also the need to be educated and not left behind, especially with the success of the European market to launch Bitcoin, Ethereum, and crypto ETPs that 21Shares pioneered back in 2018. So the need for education from regulators to understand from first principles the risk disclosures of these different blockchains, the teams behind it, the previous bugs and hacks that happened before, the value proposition from the consumer insights perspective. Many investors are asking for allocations around the world. In the US, it's more discretionary right now. It's not recommended by financial advisors yet, or at least on a smaller scale at the moment, which was, again, the incredible TAM that we could see in the future. But I do think what has changed is the administration, quite frankly, especially in the US. We've seen that there is more regulatory clarity to file for an application for certain assets that do have already a futures market, for example. And what we've seen from, I would say specifically in the US, is also the fact that when overissuers are incredibly respected and respectable in the asset class are coming in to launch similar products to the crypto native ones, it adds credibility and weight to the relevance of this asset class, right? So seeing the BlackRocks of the world coming in really added weight to the impact that this asset class could have from an investment management perspective. But the long story short, and I have to give props to regulators, is the need for education, the openness for getting access to information that is impartial and fair. And that's why when you think about the launch of the world first Bitcoin ETF, they actually mentioned 21Shares and ARK, our partner on the US Bitcoin ETF, that they agreed on our research that showed that if you wanted, or any investor wanted to manipulate the futures market, they had to do it on the spot market. But there was a high correlation between the two that we were able to show that proved the point to be unlikely to happen, to be manipulated. And that held basically the SEC to be able to approve these ETFs in the US. And verbatim mentioned 21Shares was one of the key highlights of our career here at 21Shares. So I do think that, again, the openness for education is definitely one of the things that translate into what we've seen so far with the Genius Act and then the pending Clarity Act that would definitely unlock capital into the US and more innovations around blockchain rails.
That is the one nice thing about the industry is we have a lot of incredible researchers who can put together some very compelling stuff. And when everyone is doing it at the same time and having all this available, I feel like it really does help to push things along and everyone can take it from their own perspective and push in their own way. And it's resulted in, things moving very quickly, which faster than I ever would have expected. And just having, dealt with some of that, I just did a talk at Georgetown on like financial regulation and crypto and just kind of my experience and just
That's amazing.
the amount of times I like sat there and watched $2,000 an hour lawyers argue for like 18 straight hours and then walk out and say, I don't know, man, like if you do it, you might end up like Ross. Sorry. Like good luck. If you want, try, but and just like, oh, that's cool. And so I think it's nice to see that there is a little bit of certainty coming back, and that'll allow just investment for one thing and also inspire a bunch more entrepreneurs to take it up, because all the best guys I know, they moved to Dubai, moved to Singapore, some of them, some literally at risk of getting bombed right now. They're over there trying to build crypto products because they can't do it here, and it's just like, that's such a shame that you have people having to do that and scaring a lot of the best talent away. So I'm hoping, and I've seen it already, even just in the past, the last podcast I did, just interviewed a kid from Crash Market who's out of UT, and he was just really smart kid, super bright, and you could tell that generation is finally coming back, which is super exciting to me.
Love to hear it.
Yeah, no, it's that's what's hopeful, I guess, to me. I can see it all finally coming back. But I guess the only other thing that they might also be doing is some of the AI stuff. And so I'm curious what your take is there. Has it helped with the research you're doing? How have you like integrated it, if at all, into what you guys are doing? And as you're investing in products or looking at how it might affect crypto, like from everything from cybersecurity to making the development more efficient. I'd love to just hear your take on how you see the two worlds kind of coming together or maybe clashing.
Yeah, so it's a phenomenal question because crypto for the last 5 to 10 years has been the main character in terms of the next new shiny toy and frontier technology that investors should invest in. And then ChatGPT came in and say, wait a minute, we can do better. We can make your life easier from a research perspective and finding information. Watch out, Google. So in 2022, ChatGPT came out. And then from an investment management perspective, we've seen investors looking at AI companies and hyperscalers and data centers really seriously after that moment, which basically moved Bitcoin to be the middle child, right, compared with AI from a investment perspective. We've seen memory stocks, interference stocks as well, doing incredibly well. And space is coming out now with SpaceX. So, from an investment perspective, there is an opportunity cost to either invest in crypto or AI or space. all the three of them and then allocate accordingly based on risk profiles and time horizon. That essentially, and interestingly, we've seen that AI has a very interesting convergence with blockchain rails, right? When you think about an AI agent will never open a bank account because only humans can do it. Unless humans want to open a bank account for the AI agent, but by themselves, if they are completely automated for tax reportings, for transacting on a decentralized exchange on your behalf, I do think that blockchain rails are essentially the best platforms for allowing AI agents to transact 24/7 on behalf of customers, investors, enterprises, and high frequency trading firms. That this intersection is not well understood and is still an untapped opportunity at a global scale. And as more people use stablecoins for groceries, payments, mortgages, etc., we're going to see these AI agents being integrated in our real life as well, which is great for increasing productivity. And that's why I do think that there is a convergence between the two from a usability perspective. From a productivity perspective, AI can really support with finding bugs, right? In an accelerated way. We've seen that with Zcash, where they were able to hire a security researcher. Zcash is a privacy token, like Bitcoin, but in a private way. Similar monetary properties, like 21 million coins in limits. And they were able to find a bug that would basically inflate the number of Zcash if someone was able to exploit it. There is no evidence that it was exploited, but Anthropic was able to find that, or at least the model was able to find that. So I do think it's a double-edged sword when you think about the convergence between AI and crypto from a cybersecurity perspective. You're going to see the benefit of finding bugs, but also, unfortunately, nefarious activities on the back of that, where people would try to steal funds or finding bugs on the code base and tanking the token itself, right? So that's why there will be more net positive out of that, especially if this is in the right hands at the right time for users and entrepreneurs and developers. But I think that's a very interesting convergence that shows investors that there are basically two mega trends that are converging and would definitely benefit them potentially in their portfolios. And I do think that Venice, for example, which basically tries to create the private ChatGPT on blockchain rails, leveraging a token for getting access to credits, is the best example of that as well, right? Where essentially we are seeing a real product that feels like a Web2 product like Perplexity or ChatGPT, but built on blockchain rails for leveraging the platform with token credits. So I think that's a fascinating space to watch. It's so early stage that it's hard to tell which products or use cases are going to be the most successful. But I do think that in crypto right now, I could see some of the best use cases around data centralization and integrity, cybersecurity to prevent some of these worst case scenario of hacks that would benefit the asset class, and then eventually payments and trading.
I totally agree with you on all that. I think one thing I'm excited about, I feel like it'll be the saving grace for not having enough good front end developers, where just like the UI of crypto has been forever terrible. And I'm like, if we could just, cut out all the UI, not have to deal with all these insanely, like every time I review one of my buddy's projects, I'm like, no one understands anything that's on this page, like not a single word. It's just, you're gonna have to read 12, and he'll point me to like 12 Medium articles. I'm like, no one's reading your 12 Medium articles. Like maybe the AI will actually read them. Like that might be, they have all the documentation nicely laid out, and 1% of the population will sit there all night and just love digging through it. But that's not the average person, and I think it'll really help with stuff like that. And I think on the security stuff, I can see it being somewhat of an issue, but at the same time, like crypto has been the biggest honeypot for hackers in the world for 10 years. So like in a lot of ways, these are probably more battle tested than 99% of products out there that are probably, almost lower hanging fruit in a lot of ways for people who are trying to find the holes in them. So I know there's been a lot of people trying to scare each other with some of this stuff, but even the bugs they are finding, in places like Zcash, some of those bugs maybe they were by design. You never know. Sometimes, yeah, sometimes these things are in there, or they just were never quite surfaced and never would have been otherwise. And so I think uh, it's exciting from that perspective, and it'll also allow smaller developers who don't have access to these teams to review all of their code on an ongoing basis to have at least an extra layer of review. And I
Right.
found that is,
Yeah.
because it can cost, $10,000-$20,000 for a good security audit. And if you're doing that every time you're pushing an update, you push it up like once a month, then like that becomes a real cost of doing business. And even then, you got to trust those people on the other side too. So
Yep.
uh, I hope it'll democratize that a little bit. And I've seen crypto people picking up these tools and just building like almost no other industry. They really are the only people I've seen fully taking advantage of the tools to just ship way faster and way more products. So that's exciting to me. And I think crypto can become the coordination layer between all these disparate products that are getting spun up, where you have now all of these people who are putting things out, and you need some layer of incentives and coordinations to differentiate, and the token models may become just as important as the product. And there might be an interesting change of how those things go. But I'm excited for it. I think we've got a brave new world. I think if like crypto is the rails of AI. Like AI loves to use crypto. It's simple. It'll move around quicker, easier, faster. And you're like you said, account management is the biggest nightmare. The AI gets stuck when I have to log into 12 things and make accounts. That's all I'm good for anymore. It's just all right. I'll put in my name. I'll make the account.
I
So
agree.
so I guess maybe our last question here. What are you looking forward to the most? Are there any projects or products on the horizon, either with what you're doing or just what you've seen around you, that you're particularly excited about? And just kind of like, what are you paying the most attention to day to day these days?
What I'm excited about is how crypto can get to mainstream adoption. Because right now it's been really a niche as a class for aficionados. People left the industry as well after the NFT collapse and the bubbles that we've seen around meme coins. So I'm looking forward to seeing crypto being part of a broader savings plans for multiple investors around the world, but even the consumer products that we're building that would become the next Amazons and Googles of the world. I predict is the early innings of what the Google moment could look like for us, right? Where there is a product out of necessity after market close that investors want to leverage for hedging over the weekend for silver, oil, gas, etc. So I do think that more and more products coming out like that would be really important. And because crypto has become and was actually so far very complex to use, to your point, with the different steps to save even like a private key and then making sure that you don't even lose it. Otherwise, your funds are completely gone forever. Well, the good thing maybe with like Anthropic and OpenAI is that you can retrieve your private key, right? There is one guy that actually was able to do that last month that was really impressed with. But I do think that simplifying the user experience for our moms and pops and next generations to use it without realizing that they're leveraging blockchain rails is so important. And also moving away from the perception of speculation, moving away from the perception of risks is also key. And these are the same growing pains that the internet has experienced as well. In the early days, people were talking about, computer nerds and people leveraging the internet just for illicit use cases and nefarious use cases, and then completely change the way we could communicate. Even today, thanks to internet protocols, we have that conversation, even though we're not in the same city, which is really powerful. So I'm looking forward to having these kind of consumer products, enabling people to realize that crypto is their friend, right? Or realize that crypto is really here to change for the better the way they are touching internet applications, or interacting on the internet for transferring value, hosting value, protecting their own data, etc. So on the back of that, I'm excited about the conversions between AI and crypto at the consumer-facing level. I'm excited about privacy, but using the right way, where there is accountability for the bad actors as well. I'm looking forward to financial services around crypto that feels like you can have insurance in case something happens and you lose your funds. There is basically an insurance plan around it. where people could feel more safe. Think about how the internet came such a long way to have the lock at the top left of your search bar, where it feels like it's a safe website that they're not going to steal your information, right? We're not there yet in crypto yet, even though in the early 2000s, our moms and pops were scared to use the internet to even like pay for flight tickets, and now it feels like second nature. So changing the human psyche around it would be really great. So these are the mega trends and themes that I'm excited about on the back of enabling crypto in the right way to get to mainstream adoption.
That's so funny. I'd never thought about that, but you're so right. Like back in the day, you would hear your parents say, "I'm not putting my credit card on the internet." It's like,
Yeah,
what a crazy statement that is today. Everyone's like, "Ah, my credit card's locked in. It's on 12 different platforms. You know who I am." And so I think that's a very similar case where everyone's going to get a lot more comfortable with this stuff very quickly, and it'll be before you know it. And I mean, I will say 10 years ago, if you had told me we would be here today, I would have said, no, it'll take a little bit longer. So we're ahead of schedule, in my opinion. And I think the right people are taking the helm and doing right by it too, like yourself. So appreciate having people like you out there building stuff that matters.
appreciate. Thank you.
Yep. But yeah, thank you for coming on. Is there anything else you maybe wanted to share, just maybe about anything specific to 21 Shares, anything, anywhere they should find you or more information about the company or any of your previous companies? Just let them know.
Yeah, absolutely. I mean, they can find more information about 21 Shares on the 21 Shares website, 21shares.com. If they want to read more about our research, they can sign up to our newsletter on the website as well, or even read our research directly on the website at 21shares.com/insights. And, we don't bite at 21 Shares, so they can reach out directly as well. And if they want to have one-on-one conversations, our research team is always accessible within 24 hours for any requests and discuss about markets and trends because education is key to move the industry forward.
That's amazing. No, and I love how accessible people in crypto are. Like that is the key. Just meet people where they are, talk to them like humans, and that's one thing banks are doing terrible these days, and all customer service these days are just awful. Coinbase needs to learn that lesson, but glad you guys have that in place. Thank you so much for coming on, and thank you all for listening. We will be back soon with another episode. Have a great rest of your day.
Thanks for having me.